Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and we're getting an update today from Mako Mining, traded on the TSX.V under the ticker MKO and on the OTCQX under the ticker MAKOF. And we're joined today with the president and CEO of Mako Mining, Akiba Leisman. And Akiba, it's great getting you back on the show just to get an update on Mako. We've actually had a couple of news releases out just recently that we're going to get to in this interview. Akiba, just today, you put out your Q2 2024 operation results and financial results on the company, and it looks to be a record quarter at San Albino. Just for people listening in, the company operates the San Albino Mine in Nicaragua and is also mining from the Las Conchitas concessions as well as around the San Albino area and pit. But you've had a good operations update. I got kind of a stellar quarterly report, so I'd love you to walk us through just the key takeaways and the key metrics for investors listening in.
Sure, and thanks, Shad, for having me on again. Yeah, this is our Q2 operations update, although we always like giving a little bit of snapshots for our financials just to show people kind of where we are in terms of the profitability of our potential profitability of our mine. So Q2 was a record across a bunch of different metrics, the most important being how many ounces of gold we recovered. So on a gold-only number, we wound up recovering 12,200 ounces. Gold prices were up around 20% quarter over quarter. So that equated to US, and remember, we're always talking about US dollars over here, it equated to $28 million US in revenue. We'll be putting out our all-in sustaining cost and earnings per share number likely the second week of August, like around August 13th, 14th. That might actually be the third week of August, depending on when the calendar starts. So you'll have like a comprehensive financial performance for the quarter. But I was on X or Twitter this morning. I graded the quarter an A+. You can't really do much better than what the mine was doing for this quarter. We're operating the plant 20% above capacity, which is kind of like our optimized run rate at 600 tons a day. We had our second highest ever mill feed head grade of about 8.8 grams a ton. And for your listeners, that will definitely put us as the highest grade open pit mine in the world in terms of the census that I'm aware of for open pit mines. And that means that we're a very, very profitable producer right now. So I gave you a little bit of snapshots in terms of where the balance sheet was, in terms of debt repayment, cash balances increasing, share buybacks happening, exploration expenditures ramping up, which is now almost solely focused on expansionary drilling, not only in our areas of San Albino and Las Conchitas, but also potentially at some of our longer dated satellites to both of those projects as well. And that also includes property purchases and everything that goes with just running a mine from a sustaining capital perspective. So the free cash flow coming from the mine in a quarter like Q2 was extensive for a mine of our size, because even let's say on a run rate of just under 50,000 ounces a year, and again I think this was a particularly good quarter. So the actual numbers for the full calendar year will be less than 50,000 ounces. But for a quarter like this, it's pretty extraordinary what a little mine like ours can do. And people who look at this as a comp to other, let's call it 30 to 70,000 ounce a year producers, are just missing the forest through the trees. This is a very unique mine that allows us to generate cash to go and reinvest not only in the property that we have here, but also in the newly acquired Eagle Mountain Gold Project that we have in Guyana, that acquisition of Goldsource, which was just complete over the course of the last couple of weeks.
Well, Akiba, when you're looking at this and you see the record recovered gold ounces, 12,206 ounces, do you think that's something that is sustainable moving quarter to quarter moving forward? And if so, where will the material be coming from? And can that be grown, or is that just kind of the run rate people should be expecting now?
Yeah, so just pulled up the actual table that we had and released this morning. So we had like an 8.8 head grade. Last quarter was 7.2. The quarter before that was 8.2. The quarter before that, which was a particularly weak quarter, was 6.6. So like I've said this before, I think the average expectation should be in the mid to high sevens as a head grade. And when you have an expectation of a median number like that, half the time you should be above, half the time you should be below. And when you're above, it's actually gonna positively affect earnings and cash flow. And you're below, it's gonna negatively impact earnings and cash flow. So 8.8 arithmetically is higher than high sevens. So in terms of that, I wouldn't have the expectation to underwrite your financial models on the back of that kind of head grade. But I've said this before, is that we have 188 square kilometers on our ground. We have 28 kilometers of strike. Frankly, the gold goes off our property in all directions. And I haven't seen anything within kind of like the barriers of statistics that shows the stuff that's even 20 kilometers away from our mine is different than what we're mining right now. It literally is all the same stuff.
Well, just to that point, you just put out some really good exploration results. And it was at the Las Conchitas area, 37.8 grams per ton gold and 50 grams per ton silver over 2.8 meters. Had a couple other good drill results in there. Maybe just speak to some of the drilling the team has been doing at Las Conchitas.
Sure. So we made a decision last year. Actually, it was really at the end of 2022, which was initially a little bit of a risky proposition, which was to more or less stop our core drilling program. We had at one point in 2022, 7 rigs turning. It had a run rate of maybe like 65,000 meters a year, factoring into everything associated with exploration. That kind of wound up being a little over a US $15 million a year run rate for everything that needed to be done from an exploration perspective. And we just determined that was too much of a capital spend for us, especially in 2023. So we decided to do an RC program. So currently there's 4 rigs on site, all turning. There's going to likely be a 5th that will be added to this. So for all intents and purposes, we're ramped up. I can tell you right now that those 4 rigs that are turning right now are cranking out more data than what we would have if we were going to be running 7 core rigs. So effectively, we're as ramped up in terms of an information flow as we were at our highest drilling component back in 2022. The difference is that our annualized spend is not a mid US $15 million number. It's probably like approaching a US $10 million number, maybe even a little bit below that. So this particular last quarter, I think we spent about 1.7 million. You can probably see some quarters that are going to be over 2 when all is said and done. And what that allows us to do is that at the beginning of the year, there was a lot of, I don't want to say gaps, but there was stuff that needed to be infilled because we do have a mining operation. So we put out our updated resource in November of last year. So really for the first 3 months of the year, the urgency, if you will, took priority over the importance of our drilling program. So we really focused on infill work. And then the press release that we put out last week was the first results really from expansionary drilling. So here's areas that are pretty close step outs. So we're talking about stuff that's really only about 100 meters away or so from our current known resource over an area called Las Dolores. We put out spectacular holes. I mean, there's like a 1.2 ounces a ton over. It was nearly 3 meters estimated true width. This was 16 meters from surface. And it was very close to our current mining operations over at Las Conchitas South. The particular area of Las Dolores is somewhat important, is that these are areas that we could wind up starting to mine this year. So we can open up areas around Las Dolores really as early as October of this year. So I've gotten into trouble for saying something as obvious as this. So I'll try to be a little bit careful with my language, is that the drill results that we put out are almost by definition more valuable than what an exploration company without a mine would put out, in that the areas that we're talking about right now can be accessed through our mining operations in a matter of months. So from a discounted cash flow perspective, they really are worth a lot of money to the company when we have results like this. The other intriguing thing about Las Dolores is that really going back as early as 2019, when we first got involved, you walk the ground and you walk Bayakun, which is kind of our most well-developed zone of Las Conchitas South. And then you look at some of the trench results over at Las Dolores, and it was like, there's no way in hell that these two things don't connect. Like they just, like, we have geologists that say that, we have non-geologists that say that. It doesn't make any practical sense for these two things to not connect. And when we were doing our 2020 resource, we would get like really good results over at Las Dolores, and then we would drill like maybe 5 meters away, and we would come out with goose eggs, because the geological model, the structures, the movement of this thing is complex. So we put out that 2020 resource. The overall I guess there was no resource in the 2020, but even in the 2023 resource over at Las Dolores, you were talking about an area that only had like a few hundred ounces of resource because we couldn't string it together, knowing full well that this connected to Bayacunan. If we did connect it, we would be able to effectively double the strike length of the deposit in this zone. So we finally did enough RC work that we got a handle on what the complications and the complicating structures were of this thing, and it clearly connects. So this not only expands some near mine feed that we're going to have as early as 2024, but it also starts cracking the code of what Las Conchitas South is going to look like. And it's one of the reasons why it was clearly a successful decision of us to transition to an RC program versus a core, because we now know enough with the deposit that we care more about whether or not there's zero gold, high grade gold. It's not really binary, I call it tertiary, like decision process over here. That's more important to us. That decision point is more important than knowing the exact grades of particular zones, because we know if we can drill something out to the point where it hangs together, we know pretty much what the average plus or minus 30% grade is going to be in the deposit, and we can start really thinking about adding these things to our feed going forward. It was the exact same strategy that we planned out going back from 2019. Develop a resource that you can get a handle on, and then make sure it's correct, and then step out and grow it with exploration results. Why we became controversial by doing it that way, I couldn't answer you. But that to me has always been a kind of a sensible program on how we were going to be handling our exploration work. Now that we're ramped up and now we're really fully focused on expansion drilling, now the market is basically going to be looking at this from a fire hose perspective in terms of the amount of information that's going to be coming out, because we're not really focused on infill anymore, although we still are doing that, but at least 3 of our rigs are from an expansionary perspective. And you're going to start seeing pretty extraordinary drill results that are going to be coming out outside of our current known resource, and really all the areas that we're going to be drill testing here, both in San Albino and Las Conchitas, but also in some of the new areas that we intend to drill beginning later this year.
Yeah, Akiba, I think it's an interesting strategy to do what you've done, and instead of doing diamond core drill core just to use it as a marketing piece to the investors, it's really RC drilling to understand where is there gold, where is there not gold, how does this deposit tie together. I was going to ask you if you thought it connected, and so you addressed that issue. It makes a lot of sense to have the more efficient RC drill rigs that maybe aren't as precise on the grade, but they tell you whether there's pay dirt there or not, and whether it's mineable or not. And there's a couple other drill results that you had from the El Limon and Mango areas of Las Conchitas. Maybe just speak to those areas as additional areas beyond Las Dolores that you were just speaking to.
Yeah, El Limon is kind of a funny area of our mine, which is actually not unique, in that I mentioned this in one of the previous interviews, is that when we're in the zone, we're in the zone, and like everything connects. And it's like actually Q1 is a good example of that. We were in what I like to call the porta potty zone, because we drilled right underneath our mine contractor's portable toilet, which was where we hit this 4-meter estimated true width of 50 plus gram material. And we actually mined that zone over the course of Q2, which is one of the reasons why grades were elevated from, let's say, this mid to high 7 number to the high 8 number over there. So we were in the zone, if you will, as part of Q1. El Limon probably has about 15 meters of pseudo pre-strip before it gets into the real zone. So like I call it pseudo pre-strip, is that there still is a mineralized material there that we're sending to the plant, but it's not really all that great stuff. But, and here's the big but, literally the best hole from a grade thickness perspective is hole LC19-70. It was actually the first exploration hole that I commissioned when I took over as CEO in 2019. And the funny story about that is that the actual discovery hole over at Las Conchitas was LC12-01. So literally the first hole that was put into Las Conchitas wound up drilling about 2 meters of 60 plus gram material, and it was literally never followed up on by the previous operators. So the very first hole that we put in was not like a geological insight. It was basically, let's just follow up on something that was never followed up on before. So LC 1970 wound up hitting, I believe, 373 grams over a meter in this particular area. and it was situated maybe 20 or so meters from surface. So now we're at this point where we know we're going to get into the zone, and we know we're going to get into the zone over the course of the next 3 weeks. So right now we're here just mining what's effectively crap. And then really starting over the course of the next 20 days, you're going to be in literally the highest grade part of the deposit, a very similar situation to what we had over in Q1. So a lot of these holes are both, they're not really infill holes because they're also outside the resource, but it's kind of like holding together what are these relatively complicated structures. That was kind of important because these are going to be areas that we're going to be mining this year and next year in general. So very, very important holes in addition to the Dolores ones that we put out.
Well, and you've talked a little bit about some of the regional targets, and in previous shows, we had actually talked about Las Guyana, Puerto Rios, El Golfo. There's a couple of different areas of interest. Which ones regionally do you think has the team's interest as top of the batting order right now?
So our guys are actually literally at El Silencio right now, which is literally at the tippy top of La Segoviana. So as the crow flies, it's about 21 kilometers away from our mill. So there's some artisanal mining over there. Our guys were looking at stuff in situ, taking channel samples across actual exposed veins. And it's like you wouldn't believe some of the grades that are getting pulled out over there. I mean, we usually process that material at our internal lab, so I won't discuss specific grades right now, but I'll probably send some of these samples to our external lab, and people are going to be surprised about what we're finding. And again, like 21 kilometers away from our mill. And like in between, I don't really see all that much geological differences between places like El Silencio to all the way down to Puerto Rios, directly to the north of San Albino. It's obviously to Las Conchitas. And then it looks like we're actually going to start doing a real drill program at what has always been the second highest priority for our company, albeit we never really had the ability to get like a good deal with the landowner until recently, is El Golfo, which was the second biggest operation that was up and running at the beginning part of the 20th century.
Yeah, it's going to be exciting to see some of these new areas come into the fold and start working on it. Speaking of just getting permits and access, there was a portion of the release that you just put out today that was talking about the environmental impact assessment that you got. I guess I would call it the second part of this because you kind of did this in two stages at Las Conchitas. Will there be any other permitting that you need to do for these other regional areas? And maybe could you also just speak to what the Las Conchitas EIA really was all about?
Yeah, so this basically allows us to do life of mine mining over at Las Conchitas and also San Albino as an extension of our original EIA for open pit. So there'll definitely be new permits if we go underground, and there'll need to be new permits if we're outside this region as well. For your listeners, the history of this was at the end of 2022 when the sanctions came out and there was all this geopolitical issues with Nicaragua. We basically looked at the situation and wanted to preserve capital anywhere we could. So we knew that Las Conchitas was going to be an important part of the mill feed, really starting as early 2023. But in order for us to go and get our EIA approved across everywhere that we wanted to mine over the entirety of the mine life for the open pit perspective, would have required us purchasing a lot of surface rights, which probably required an aggregate close to US $4 million when all is said and done. And we didn't really want to spend that at the end of 2022 for obvious reasons. So we spoke to the government and we said, hey, we have an idea. What do you think about this? Is it possible to break the permits into two, right? Can we get a quote unquote temporary bulk sample permit just on 6 areas that will serve as our first phase of mining for Las Conchitas? And then once it's up and running, we'll wind up acquiring the rest of the ground that we need, and then we'll submit our full EIA and we'll get that approved. And they said, sure, no problem, just paper it up and we'll see what we can do. Now, we probably a little bit overly optimistic on when that bulk sample is going to come in. So we were expecting that to happen in March of 2023. It wound up coming in June in 2023. But in the context of mining, that's pretty much on time. But the reason why we had a little bit of fits and starts to our operations in 2023 was principally because of that, is because we needed to access our low-grade stockpile because we were expecting to have some of the Las Conchitas material come from those 6 areas. But we were only operating under a bulk sample. So that bulk sample was only going to be good until initially it was only to be good for like basically 6 weeks until the end of Q2 of 2023. We asked for an extension. They said, yeah, no problem. Got extended to the end of last year where we were expecting to get our EIA. Our EIA actually didn't come last year. So we asked them for another extension on the bulk sample. They said, sure, no problem. Got extended to the end of Q2 this year, and then it got extended again, and then finally we got our actual EIA. So there's literally nothing different than what we're mining and how we're sequencing today versus, let's say, last week before we got this permit. There's a theoretical risk, or there was a theoretical risk that if we didn't get the EIA and the bulk sample lapse without a renewal, that we would be without a permit, right? So obviously that got taken care of. But I have to like step back a second, and you have to think about the jurisdiction that we operate in terms of where people are trying to build mines these days. It's very unusual to have governments that actually want you to be there, and stakeholders in general that want you to be here. One of the things about operating in Nicaragua, and frankly even operating in Guyana, is that the government wants you there. The people, at least in the areas that we operate, want us there. So this is a good example of, can we do things that are creative to make sure that we can optimize our balance sheet and optimize our permitting strategy with as limited impact as possible to the operations. And Nicaragua happens to be one of the very few jurisdictions globally where you can do some of the stuff that we did. If we were operating in the United States or Canada, and kind of the approach, well, first of all, we would never even try to do this approach, right? We would just acquire all the surface rights and then get the full permit in the first place. But if we were, there's no other jurisdiction that we would even attempt to operate this. And this is not about us like cutting corners on permitting. It's like we're doing the same exact thing as what we would do with an EIA. This really is about a government agency trying to help us going through whatever corporate issues that may come about, and do it in a proactive way, in a way that helps like all the stakeholders here. It helps the community, it helps us, it helps the government receive a lot of tax receipts from what we're mining. So it's been a pleasure to operate in Nicaragua, and really I think people kind of miss the forest through the trees in terms of what an advantage it is to be operating in a jurisdiction like this.
Man, very well said, Akiba. We continue to hear people out in the marketplace say Nicaragua is such a risky jurisdiction, but like you say, I don't think the US or Canada would have allowed you to do that EIA in two parts, as the bulk tonnage mining and then, the second part of it. And they may not have even extended the timeline as much as they have here, because they really are working with you as a partner to try to help you and all the people that are working there, all the jobs it provides, and all the things it does for the economy. So you brought up what a good jurisdiction Nicaragua is, and many people are noticing the same thing in Guyana. I think it's important to note that on July 3rd, you did seal the deal with the acquisition of Goldsource Mines for their Eagle Mountain Gold project in Guyana. A lot of people are probably wondering, okay, Akiba, what's the timeline looking forward now for development? Are you going to be doing some exploration work there? What is the plan now with the Eagle Mountain Gold project?
Right. So first order of business was that the mineral license needed to be renewed, right? So there's a limited amount of stuff that we can do until that happens. So that was submitted, I believe, the end of May. So hopefully we'll get that in pretty quick fashion. And then right now we're kind of like scoping out the two phases of what needs to happen. It's like everything that needs to be done in preparation geologically to make sure that we tighten up the resource and to be ready for mining. So we're scoping out kind of like our infill program for that over the course of the next year or so. And then working in parallel, we're going to be really putting the pedal to the metal when it comes to engineering this project. And we have the ability to do in-house engineering for this, and trying to design the mining operations and the plant in a very similar fashion to what we did of San Albino. Is that we want to do this in a way where you can have as little capital intensity as possible to get the operations up and running. And then once you're in operations and you debottleneck it and have cash flow that's generated, you then can wind up opening up the floodgates, if you will, of how big your plant can get, how big your mining operation can get, how big your exploration program can get to go and find more and more ounces in the district. So there's a lot of similarities between Eagle Mountain and San Albino. And then when you're sitting in this district of Madia, it really does have all of the geological potential to eventually house 5+ million ounces, kind of just like we said over at San Albino. But at the same time, you can actually wind up effectively opening up a relatively small scale, low capital intensity project that could eventually be expanded in phases. So like we kind of made a tagline in our press release when we announced the deal, is that this was kind of like a hand in glove transaction. We have like a couple of slides that show the similarity of San Albino and Eagle Mountain. Part of that is certainly hand waving, but also part of that is just prima facie true, is that these are actually projects that look and smell alike. While they're different geologies and certainly different jurisdictions, the jurisdictions are very similar in that both jurisdictions are mining friendly. The types of assets that we're dealing with are certainly similar in that they have the ability to be scalable and low capital intensity. The people and personnel are very similar now that we've integrated Eric Fear as non-executive chairman of the board, Eric Fear from Silvercrest, Steve Parsons, who's coming on as president for the company as well. So we have the ability to integrate teams that work together very well, assets that work together very well, jurisdictions that work together very well. And now that we actually have this expanded platform, we are starting to see many more opportunities come across our desk to do this again and again and again.
Yeah, repeat the process, rinse and repeat. So I think people will be looking to see if there's any other acquisitions down the road that make sense. But right now, you got your hands full in Nicaragua and Guyana at both projects, doing a lot of work. Is there anything you want to leave people with, Akiba, as far as key milestones or key events you want them to watch out for the balance of this year?
Yeah, so the very initial thing is to make sure to pay attention to the exploration results that are going to be coming out. So there's going to be a series of these press releases that will happen over the course of the next 6 weeks. Everybody should be focused on our Q2 actual financials that will give a lot more detail than we did in our operating report that will be out in and around August 13th, which we're still trying to schedule the exact date over there. And then really bear in mind, like now is rainy season, so Q3 is always kind of like a hit and miss type quarter in that regard. So everybody who's invested in Mako always pay attention to the weather. So hopefully we won't have too many hurricanes that hit our property for this year. And then starting at and certainly at the middle of Q3, end of Q3, Q4, we're gonna be a very similar situation to Q1, where we're kind of in all of these very high grade zones that we're starting to open up. And that cash flow that's going to be generated from San Albino is really going to be applied to not only the assets that we currently have and the ability to get Eagle Mountain up and running, but also it's going to be putting us into a position to look to do things on the M&A front as well.
All right. Well, I think we'll wrap it up there for today, but always appreciate having you on the show, Akiba, just to give us an update on Mako Mining. And if people listening in want to follow along with Mako Mining news, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you too can follow along with all the drill results that will be coming out over the next 6 weeks. And until next time, looking forward to our next conversation.
Okay. Appreciate it, Chad. All right, take care.